Academy, and if this is your first time of coming across this channel, please do well to subscribe to this channel, turn on the notification bell to get notified when we upload our weekly contents. Okay, so in today's teachings we are going to be looking at the smart money concepts trading model series. Okay, we're going to be looking at defining the higher time frame PD arrays. Okay, in the order of importance. Okay, we're going to be looking at the order of importance. So we have successfully covered the 6 PD arrays. Okay, this is premium to discount arrays. We have successfully covered it, and we have them laid out in different series. Okay, we have the mitigation block, the breaker block, the other blocks, and the rest. Okay, so for a full understanding of this video, kindly make reference to the previous videos that talked about each PD arrays separately. Okay, so we talked about the 6 PD arrays in separate videos. Okay, so you might want to make reference to that to be able to understand the concept fully, to be able to understand this particular episode. Okay, so I talked about putting together the in the order of importance on how price seeks for each PD arrays. Okay, so we talked about that, and I made mention that we are going to get to it. Okay, so in this episode, that is exactly what we are going to do. I'm going to be looking at the order of importance at which price seeks for the PD arrays. Okay, from the premium to the discount arrays, we're going to look at the order of importance, the hierarchy. Okay, so with that said and done, let's get down to today's business. All right, so now we always view price in some level of resistance or support. Okay, so for a better understanding, using a kind of a higher time frame resistance term or institutional reference point, and we are looking at a higher time frame support or institutional reference point. Okay, so now we are going to looking at the graphic depiction we have right here. Okay, so if let's say we have price, okay, this is the current market price at some sort of resistance level or stationary reference point. Okay, it can be a bearish order block, we have price just reached for the support for a resistance level. Okay, it can be an old high resist, a bullish order block, a fair value gap, or whatever that forms this higher time frame resistance level. Okay, now we are anticipating price to, we are anticipating price to move lower from here. We are anticipating price to drop lower from this resistance level right here. Okay, so now the thing is that the importance of time. Okay, we're going to be looking at time and price. Okay, so what we are currently expecting price to move from this level as a resistance level, but the time factor that price is going to make that move is what we as a trader are not quite aware of. Okay, so it might take it might take days, depending on the time frame we are viewing it from. It might take weeks, it might take months, it might take hours for price to show the displacement. Okay, so now until price shows this displacement, the willingness to move lower from this our higher time frame resistance level, we as a trader have to be committed to time. Okay, which is the two elements that matters in price. Okay, the two elements of trading are time and price. Okay, so now when they both agree with one another and you as a trader have waited for that agreement to come into play, okay, that is where profitability and opportunity are. Okay, so now we have a price, obviously market price that has reached into some sort of resistance level, right? So we are anticipating lower prices. Now the time for us for that or for us to see a displacement is the basic thing that we are not aware of. Okay, it might take the exact time is going to take for that to come into play. That is where we are committed, we should be committed to as a trader. Okay, we are committed to time and price. In other words, price is what you are studying. Okay, as a trader, why you submit to price, why you submit to time, sorry. Okay, so now the difference between the market price and the future price, okay, these two institutional reference points, the difference between these two reference point is time and price. Okay, so the exact time it is going to take for price to move from this level down to this future price anticipated level is unknown to us as a trader. Okay, so the concept of time and price is very important. We have to be committed to it if you want to see profitability and certain opportunities. Okay, great moves and great opportunities, you have to be committed to the concept of time and price. Okay, so that is just a little something I wanted to add to this episode. Okay, so let's get down to the real concept of the day. Okay, so our vice versa would be for if we were in a trading at a particular support level. Okay, so we are we are expecting a kind of displacement, right? So the times it take for that to come into play is unknown to us. Okay, so while waiting, we are committed to time, we are studying price, at the same time we submit to the concept of time. Okay, so these are the two elements that are very important in trading. Okay, so the difference between this current market price and the future price that we are anticipating price to reach for is time. Okay, so while study price, I repeat this, while study price, we wait, we submit to the concept of time. Okay, so now let's go down to the main topic of the day. Let's get out to the main thing of the day. Okay, so now we have premium. Okay, we have price at a premium level. Now you remember we talked about premium and discount, okay, which is more like support and resistance, right? But we as institutional traders, when we view price, we view it with the logic of premium and discount. We view it as price moving from some sort of premium down uh to discount level. Okay, so we sell at premium and we buy at discount price. Okay, so now the hierarchy on the order of importance of which price is going to seek for the PD arrays. Okay, so we are going to view this from two perspectives. Okay, so we are going to, the first perspective we are going to look at this from is price moving from some sort of resistance level. Okay, so now this is that higher time frame resistance we talked about, or institutional point we talked about, which is our premium level, right? So now the time that is going to take for us to see this displacement is unknown to us as traders, right? So we have to be committed, and we are studying price until we see this certain displacement. Right now, between these two reference points, the premium and the discounts, or rather the resistance, as most people know it, and the support. Okay, but we view it as premium and discount, right? So now the between these two range, the midpoint is what is known as equilibrium. Okay, and we have already talked about it, how to measure our equilibrium, how to know if price is correctly trading at a premium or at a discount. Okay, we have talked about it in our previous lessons. Okay, we simply look at the current range we are. Okay, we simply look at the current dealing range that price is trading at. Okay, so and you measure it with your fib. Okay, depending on where you are expecting price to you are expecting order flow to to reach for. Okay, so now back to this. Okay, so now remember, between the premium and this discount level, okay, the midpoint is known as the equilibrium. Okay, so now we are currently trading at premium, right? So we are expecting lower prices, we are expecting price to drop from this certain level. Okay, now once we see that displacement, okay, and the time of course is unknown to us, the time that price will start showing the willingness to move away from this particular level is unknown to us as traders, right? So but once we see this displacement, right, with this move away from that resistance level, as price drops away from that resistance level and goes into the retracement phase. Okay, now as price moves back into the retracement phase, we have already seen a displacement. Right now, what we are going to do is that as price starts retracing back up into this is now our current dealing range. Okay, this is now our current dealing range. As price starts retracing back up into this dealing range, okay, we are looking for a particular level to sell at. Okay, so we are looking for institutional reference points, we are looking for institutional resistance level to sell at. Okay, because we are at premium and we trade to an area where institution order flow will kick in. Okay, so we are expecting price to reach back into a kind of premium level to sell in this. This is our value range, right? We are expecting price to move from some level of premium to discount, right? Then this is our current dealing range, because price has just showed displacements, has showed the willingness to move lower. Now as we see this displacement down, and as price starts retracing upwards, this is where the hierarchy or the order of importance on the premium arrays comes into play. Okay, so now this is the order at which price is going to start seeking for this reference points, for these institutional resistance levels. Okay, these are our institutional resistance level, this is our institutional reference point, and this is our institutional premium array. Okay, so now the first thing that price is going to reach for, okay, as price starts going up, okay, what do we do first? We measure our range, right? We take out our fib and we measure from the daily range high, that shuts them the daily range high to the daily range low, right? Then price is obviously going to reach for equilibrium and above equilibrium into the premium of this daily range, right? So now the order at which price is going to start seeking for these arrays from the premium arrays is that the first thing that we are, as we look up above the current market price, okay, so now as this retracement starts happening, as a trader we look up above the current market price. Okay, now we start looking for the following. Okay, we start looking for the premium arrays in this hierarchy. Now the first thing we look at is there a mitigation block above the current price? Okay, so you look for a mitigation block above the current price. That is the first thing that price is going to seek for. Okay, price is going to seek for, is there a mitigation block? If there's no mitigation block, you check that off. Okay, so now the next array, that premium array that price is going to seek for, is that, is there a bearish breaker block? Okay, is there a bearish breaker block? Okay, so we know what a bearish breaker block is, right? If there's no breaker block, then you check that off. Okay, then if price is going to seek for is there a liquidity void that needs to be refilled? Okay, is there a liquidity void above current market price, above equilibrium of this range, right, of this particular dealing range? Okay, price has shown displacement from that premium level, that resistance level, higher time frame resistance level. It shows the willingness to displacement, the willingness to go to trade lower. Now we are looking for an institutional premium level to sell at. Okay, to sell at, we are looking for a resistance level to sell at. Okay, so now as price starts retracing back up into this current range, the hierarchy at which is going to seek for the premium arrays is that the first premium array price is going to seek for is that, is there a mitigation block? If there's no mitigation block, we check that off. Okay, you look above current price, is there a bearish breaker block? If there's no bearish breaker block, check that off. Okay, is there a liquidity void that needs to be filled up above current market price, above equilibrium? Is there a liquidity void? If there's no liquidity void, check that off. Then we look for the next premium array we look for is the fair value gap. Okay, so we look if there a fair value gap that we can sell at. Okay, that we expect price to reach for and fill completely, and to sell off from. Okay, if there's no fair value gap, then we look for a bearish order block. Okay, so we look for a bearish order block. Is there a bearish order block that price might likely reach back up into and sell off? If there's no bearish fair value order block, sorry, then we look for a rejection block, and finally an old high or old low. Okay, so an old high and old low, an old low will look like a classic support support turn resistance. Okay, we are going to look at all this in price action. Okay, but this is the order of importance or the hierarchy at which price is going to seek for HPD arrays. Okay, so now as price starts retracing, like I said, the first array is going to seek for is a mitigation block. Okay, if there's no mitigation block, there's really going to be a breaker block. Okay, but if there's no breaker block, you look for a liquidity void. Okay, that is going to likely get refilled back. Okay, so if there's no liquidity void, we look for a fair value gap. If there's no fair value gap, there's definitely going to be a bearish order block or a rejection block or an old high, old low that we can sell off at. Okay, so this is the order block, this is the order of importance. Okay, so I'm going to explain further as we so let's go down and look at it from the other perspective. Okay, so now let's assume we are at a discount level, right? We are at a discount level, and price has showed willingness to move up. We are moving from some sort of support into a resistance area, which is the premium area. So now the order, this is the current market price, right? So we look up above this is the whole range. Okay, now this is our equilibrium, right? Now we look up above the equilibrium and the order at which price is going to start seeking for the premium arrays. It is the same as this. Okay, so this price leaving this resistance level down and retracing back up into this range, this is our daily range, right? This is our daily range. Then for this second episode, for this second example, this is our daily range. Okay, we are expecting price to move from this level to some kind of resistance level. Okay, so we are looking to what do we do with the premium level. Okay, the premium arrays, we are simply looking for where in this example, we are looking for the premium arrays to offload our longs at. Okay, so if let's say if smart money accumulates down here, some long went long down here, they are going to look for some sort of resistance above us to sell at. Okay, so now this is our resistance level. These are our resistance institutional reference points that smart money are going to offload their long positions that they accumulated down here. Where for the first example, this we are looking for resistance to sell at, to go short. Okay, to accumulate more short orders. Okay, in this example, smart money has shown the willingness to go lower. Okay, they have already placed they sold off the resistance level, and it shows, and it has already created a displacement, right? So we saw displacement right here. Okay, so now as price starts retracing back up, smart money are going to look for reference points. They are going to look for footprints. Okay, so we are tracking smart money by the footprints they left behind as price creates this displacement. Okay, to accumulate more short positions to go to sell price even lower. Okay, so that is the difference between the first and this second example. Okay, in this case we are looking for where to offload our long positions that smart money are going to accumulate down here. Okay, so now as price expands up, expands higher, as price keeps going up, okay, above the equilibrium of this whole range. Okay, above the equilibrium, remember you buy at discount, you sell at premium, right? So now the order at which price is going to seek for the premium arrays is the same thing. Okay, we're going to look above equilibrium, above current market price. Is there a mitigation block for smart money to offload their long positions at? Okay, is there a mitigation block? If there is none, you check that off the list. Okay, is there a bearish breaker block? If there is none, you check that off. Is there a liquidity void that needs to be refilled? If there's none, you check that up. Okay, is there a fair value gap? If there's none, you check that off. Is there a bearish order block? If there's none, you check that off. Is there a rejection block? And the last but not the least, the old high or an old low. Okay, so now one thing we should take note is that the further you go up on this list, okay, the more deeper you go into premium, okay, into premium market, and certain arrays will keep you from seeing the next higher arrays. Okay, what do we mean by that? Now there are going to be times that we are going to have more than 3 premium arrays on a particular price action. Okay, there are going to be times we are going to have a mitigation block, a breaker block, a liquidity void, and a bearish order block. Okay, on a single price action. Okay, there are going to be times we might just have a 1 premium arrays or 2 premium arrays or institutional reference point or resistance level, that institutional resistance level to sell at. Okay, that smart money are going to sell at. Okay, so now what do you mean by the further price reach up for the next for the higher premium arrays, the further we go into the further you go up on this particular list of resistance level, the more deeper you go into the premium market, which is what is termed as a highly overbought or oversold market. Okay, so now certain arrays will keep you from seeing the next higher arrays. Okay, so there are going to be cases that price might likely reach into a bearish order block. Okay, a bearish breaker block, and it will fail to reach up, and there may be a liquidity void above the bearish breaker block. Okay, so there are going to be sometimes the price is just going to reach for the bearish breaker block and start bounce off and start dropping from there, and it may fail to reach up and fill the liquidity void or the fair value gap above that bearish breaker block. Okay, so there are definitely going to be sometimes price might likely just reach up into a fair value gap and may not reach up into a bearish order block. Okay, it might just reach for that fair value gap and start dropping. Okay, so there are certain times that this is going to happen. Okay, your price might likely reach into a mitigation block and start dropping without reaching, and there may be breaker block. There may also be breaker block right there, but price is reach for a higher certain arrays that is going to keep price from reaching for a higher one. Okay, so if there's a bearish breaker block and price has already reached into the bearish breaker block, there's going to be times it will not likely reach for the liquidity void or fair value gap above it. Okay, it might just start trading lower from there. Okay, so now looking at this from another perspective, looking at the bullish the discount arrays. Okay, the hierarchy of the discount arrays. Now we have price right here. Okay, we have price react off from that resistance level, right, creates this displacement and retrace up and reach into some sort of mitigation block or bearish breaker block, or reach back into this current trading range and feed the kind of liquidity void. Okay, so now as price starts trading lower, okay, trading lower below the equilibrium price, okay, below the equilibrium. Okay, so now this is for a bearish market. Okay, so now smart money are going to look for where to offload their short positions. Okay, they are going to look for where to buy back their shorts, to offload their shorts. Okay, so now the order at which, and we will sell at premium, buy at discount, right? So now the order at which they are going to look for the discount arrays is as follows. Okay, so the first thing they are going to look for below current market price as a support level, as an institutional support level. The first discount array they are going to look for is there a mitigation block below us? Okay, is there a mitigation block below current price? Okay, so we look for if market is currently dropping from some sort of premium down into a discount and we are short at premium. Okay, where do we look to exit our, where do we look to offload our short positions from? Okay, so this is the order at which we look for the institutional reference point to offload our short positions at. Okay, so we look first, is there a mitigation block below us? Okay, if there's no mitigation block, we check that off. Is there a bullish breakup below us? Okay, if there's no bullish breakup, we check that off. Is there a liquidity void below us that needs to be refilled? Okay, if there's no liquidity void, we check that off. Is there a fair value gap below us that needs to be filled? Okay, if there's no fair value gap, we check that off. Is there a bullish order block? Is there a rejection block? And finally, is there an old low or an old high? Okay, so this is the hierarchy at which price is going to seek for these arrays. Okay, if we are looking for a kind of institutional support level, this is the order at which we look for it. There are going to be times all 6 PD arrays is going to be active, or is it 7? Okay, 7, 1, 2, 3, 4, 5, 6, 7. Okay, so these are the 7 institutional reference points that we look to buy of, or buy at or sell at. Okay, so depending on the current order flow, okay, depending on the underlying market. Okay, so now this so going down further, viewing this from the second perspective. Okay, if this is price, okay, smart money accumulates down here, right, and price starts retracing downwards to go up. If price starts retracing downwards to go up, where is gap? Is there a bearish order block? Is there a rejection block, or is there an old high or old low? Okay, so now the further you go up on this list, the more deeper you go into premium market. Okay, and certain arrays will keep you from seeing the next higher arrays. Okay, so there are going to be times, like we made mention before earlier, there are going to be times there might be a mitigation block and a breaker block. Okay, so price might likely reach into that mitigation block and not reach for that bearish breaker block and starts trading lower from there. Okay, so that is just how price is going to start seek for these arrays. Okay, so if we are looking for let's say, as price wants to trade up from here. Okay, so this is where we offload our short positions, right? These are the support, institutional support areas we look to upload our short positions from. Okay, so if price was, let's say trading from this particular support level, okay, as we can see here, okay, if price, as we can see here, price trades from this particular support level, right, and start retracing to go up, okay, and start retracing to go up. Now the order at which we look as price trades back into this trading range, okay, we measure it with our fib, right, and go below the equilibrium of this whole range. Okay, so now the order at which price we seek for the discount arrays are, is there a mitigation block below us that we can accumulate, that we can buy off from? Okay, so already smart money has accumulated some long positions here. Okay, so now as price starts retracing, they are going to look for, we start looking for the footprints left behind by smart money to accumulate more long positions to send the market, so set price higher. Okay, so now as price starts retracing back after creating this displacement from that institutional support level, okay, that institutional support level, as price goes creates the displacement and start retracing, we measure our range, right, and go below the midpoints and start looking, is there a mitigation block below current market price? Okay, if there's no mitigation block, we check that out. Is there a bullish breaker? If there's no bullish breaker, we check that off the list. Okay, is there a liquidity void? Is there a fair value gap? Is there a bullish order block? Is there a rejection block and an old low or an old high? Okay, there are going to be times, there are going to be more than 3 to 4 discount arrays or premium arrays in a particular, in a single price leg, okay, in a single price action. Okay, so like we made mention earlier, price some arrays are going to keep price from reaching lower. Okay, so you're going to keep price from reaching lower, from reaching from going deeper, uh going down further to reach for lowest discount arrays. Okay, so the further you go down on this list, okay, the further you go down on this institutional reference point, okay, the more you go, the more deeper you go into discount market. Okay, and certain arrays will keep you from seeing the next lower array. Okay, so there are going to be times that price may likely just reach for a liquidity void, fill in that liquidity void inside of this range, okay, below equilibrium, of course. Okay, price might likely just refill that liquidity void, and there might also be a fair value gap below that liquidity void, okay, or maybe a bullish order block below that liquidity void. So price might fail to reach for that liquidity bullish order block and start pressing higher from there. Okay, so this is the hierarchy at which price is going to seek for each PD arrays. Okay, so now we have talked about each of these arrays in separate videos. Okay, so if you don't understand what a mitigation block or how to identify it on prices, okay, you can make reference to our previous videos where we talk about all these institutional reference points, discount to premium to discount PD arrays. Okay, so in the next video we are going to look at how we are going to identify all this in the marketplace. We're going to look at how all this looks like on price action. Okay, so I didn't want this video to be too long, and this is just the basics of it. Okay, this is a crude depiction of it, and of course we already know how, if you have been following us for some time, you already know how to identify a mitigation block. You already know how to you should know by now how to identify a breaker block, a liquidity void, a fair value gap, a bearish order block, a rejection block, or an old high or an old low. Okay, so that is just all for this episode. Okay, so please, if this is your first time, if you have enjoyed this video, kindly subscribe to this channel and turn on the notification bell to get notified when we upload our future content. Okay, remember our Telegram group link is always attached in the description box. Kindly click on the description box to join our Telegram community. Okay, so I'll see you guys in the next episode. Do have a great trading week.